And welcome back. Now, the Public Investment Corporation, or the PIC, wants to assure government pension fund holders that their money is indeed secure. And this follows an interview on Morning Live earlier this week, where an economist said that poor investment decisions taken by the PIC could have a negative impact on the overall pensions payout. And some of the losses suffered by the PIC include investments made to VBS Mutual Bank, Steinhoff, Sekunjalo and Ayo Technologies. Sholto Dolamo is executive head in charge of research at the PIC, and he's here to give us clarity on this and also a right of reply to those allegations. Thank you so much for coming through this morning.
Thank you very much, Akina.
Let's start by taking a look at the PIC and the Government Employees Pension Fund.
Yes.
And that relationship.
Yes. So the PIC manages money on behalf of the GPF as its main client, as well as clients like the UIF and compensation commissioners. Now, we manage that money relative to a specific mandate that is outlined by the client, being the GPF. Now, how the client arrives at that particular mandate is that they will look at what liabilities are due from pensioners as they go on to pensions, and based on some modeling, as far as actuarial modeling, determine exactly what kind of payment ratios and payments are due and when. And based on that, then they will design a mandate that, amongst other things, will include things like how much should be invested in bonds, how much should be invested in listed equities, and how much should be in cash, as well as how much should be invested, say, offshore in global bonds and in global equities. And so it is a very diversified portfolio. Now, the pension fund has done very well over quite a number of years. And if you just compare it, so you compare the assets relative to the liabilities that are due, the assets exceed the liabilities by about 8%, as at the last actuarial assessment. Now, so to argue that as a result of the investments, and yes, the very poor investments that were done of late and that were highlighted, for example, at the Commission, that based on that, pensioners are not going to be getting their money, unfortunately, is not true. And we need to clarify that, because, I mean, it's pensioners' money that we're dealing with here. And part of the reason we feel very strong that we need to clarify that is that, Sekina, I mean, I was saying earlier on, talking about the state of the economy, right, how poor the economy is doing. You do not want to create a situation where pensioners panic and withdraw their funds and incur unnecessary tax penalties when the fund actually is in a very healthy state. So I can definitely assure viewers, as well as pensioners, as well as pension contributors, that the pensions are very safe as things stand right now. Right, as I said, I mean, it's 8%. The assets exceed liabilities by about 8%, and even if you compare that to global standards, right, for a pension to exceed, for assets to exceed liabilities by as much as 8% in a pension is a very good and healthy pension fund.
But it could have been better. Because the expectation is that when you do make an investment, the expectation is that will contribute to ongoing growth.
That's
and
correct,
unfortunately, there have been some very poor decisions, investment decisions, made by the PIC.
Yes. So yeah, that's correct. And as I said right up front, I mean, we've made some very poor investment decisions. And we are currently in the process of improving on our process to ensure that we minimize that as much as possible. And I say minimize because, I mean, given any type of portfolio, you will always have some kind of losses. But no, what we don't want is losses that could have been avoided, right?
And that's the concerning part, because if you look at where those losses were made, where those impairments occurred, for example, with VBS Mutual Bank, that was strange all round, the sort of investment decision that went into that. And looking at the impairments, one has to wonder, what guarantee can you make, what guarantee can you give to pensioners watching this right now that this will not be a recurrent problem?
So as I said, I mean, we are in the process of strengthening our processes. In actual fact, as I speak to you right now, we are in the middle of a strat session, as a PIC, as a PIC executive as well as the board, trying to improve on those very processes to make sure that these kind of things like VBS do not happen again. Now, VBS was fraud. And the Terimutau, report highlighted as such. And I do not want to get into, the legal space in terms of what is currently happening, because, I mean, obviously that is in the process of being processed by law enforcement officers. So that should be dealt with, and we're very strong on this fact that should be dealt with in that manner, that this is a fraud case, and those that have been found wanting should face the full might of the law.
So the VBS Mutual Bank is one instance. Yeah. The Sekunjalo deal. And there's been criticism, and we'll talk to that lately, about you going after Sekunjalo as the PIC. But that aside, just that decision to make that investment, and this is where the Commission has been very helpful in highlighting exactly how dubious your decision-making had been as the PIC in that regard.
So yes, and I mean, we have highlighted the fact that there have been process mishaps in as far as that particular investment was concerned. And again, I mean, it's one of those that because there is a legal matter at hand, I would rather not want to jeopardize how that turns out. But I mean, my colleagues for example, in Parliament later on, I mean, earlier on in the week, have highlighted what we are doing in as far as Sekunjalo is concerned, and they've also highlighted what we're doing as far as Steinhoff is concerned.
So the Economist isn't therefore necessarily wrong in pointing out the negative impact of some of your decision-making on pension payouts. So yes, there has been an impact on the fund, but what is very important to highlight is that the pensioners' money, as we said right now, so when you go on pension, let's say for example tomorrow, you are not going to get a lesser pension as a result of what has happened in this particular case, particularly as well, because remember the GEPF pension fund is a defined benefit fund, right? So meaning?
So meaning that which is so there's two types of pension funds. There's a defined benefit as well as a defined contribution, right? A defined benefit, you have a full sight of what is due to you when you retire, right? Whereas if defined contribution, your contributions are defined, but how much you get is a function of what, at that point in time, the value of the fund as a result of market movements and amongst other things is concerned. Right?
So we talk about the impairments, and then there was, of course, the investment into Steinhoff as well, yes. And looking at that one, which some would point out would perhaps be slightly different, because Steinhoff at the time was a company that was performing very well when this investment was made, but all the same, money was lost.
Yeah. So let me clarify that one as well. So Steinhoff, as you say, was performing very well. It was a huge component of the JSE index. Now, how we manage money, particularly on the listed side, is relative to a specific benchmark that is set in the mandate. Now, Steinhoff was a huge component of that benchmark, and so ourselves, as well as other asset managers, had exposure to Steinhoff. So it was very difficult to avoid having Steinhoff in the fund. Yes, the PIC, given the size of the assets that we manage, it was quite a significant amount of in rent terms, it was quite a significant amount. So yes, we have suffered losses there as a result of obviously what has transpired there. But again, it's one of those things where we how we determine value is based on what we see in the audited financial statements, and we place a lot amount of reliance on those audited financial statements to determine whether or not there is value in a particular company, and so our investment in Steinhoff was based on the fact that we based on those financial statements, we believe that there was some value in there, and added to that the fact that obviously it was also in the in the JSE index. We had a very little room to maneuver, but to have it in our portfolios. Right?
What was the total value of impairments against the government employees pension fund?
So the total loss to date, given where it is, it's around 20 billion. I think was at last calculation in as far as how much was lost in there. It was a very big part of the of the index. And as I said, given
massive,
yes,
20 billion rand.
Yes, and as I said, given the fact that we manage quite a large fund, right? Invariably because it is part of it was part of of the portfolio. Our exposure would have been in line with what the index or the benchmark was in as far as Steinhoff was concerned, right? Or its contribution to the benchmark, right?
So what are the prospects of the PIC recuperating any of those monies that were lost?
So as I said, I do not want to sway too much into exactly what we're doing. I mean, we did highlight what we're doing as far as Steinhoff is concerned. We would like to get our hands on that PwC report so that we can figure out exactly how much value we can recoup out of our losses in that particular investment.
From the work you've done thus far, what are the prospects? Are you likely to get any of it back? A fraction of it, and yes. If so, just
we are pursuing it because we believe that there is value that we can extract out of it. Right.
So let me ask this,
yes.
and this is.
And I mean, just to come in. Obviously, I mean, there has been massive losses. So we don't think that we will recoup everything that we have lost, but certainly there is value that we believe we can recoup out of that particular investment. Yeah.
So from your earlier explanation, and this is something that I've always wondered about,
yes.
The pension payouts of government employees is guaranteed.
Yeah.
So you take government employees' pension funds and you use that money to invest in all sorts of entities and projects. But then, how is that beneficial to the pension fund holder?
So our role as an asset manager is to grow those pensions such that by the time that they can beat inflation, so they can beat inflation over time, such that by the time that an employee retires, right, the value of his pension has grown above inflation. Right, so that he is able to to live a much more comfortable life as he retires. So that's what we aim for. So we've got a huge team of highly skilled individuals at the PSC whose sole purpose is to ensure that by the time that pensioners retire, the value of their pension has grown quite significantly relative to inflation.
Okay, let's speak plainly.
Yeah.
I have R1 million,
yes.
My pension fund, my government employees'
yes.
pension fund. The government employees' pension fund is administering that, and the PIC is making investments
yes.
using my million and the millions of
yes.
all other government employees.
Yes.
So, how does my R1 million that you are using to make investments, how do I benefit as the pension fund holder from those investments that you are making in real terms?
Okay. So I mean, yeah, you mentioned in real terms. So let me give you an example. So in the last 10 years or so, right, the value of the pension fund, right, has grown on a compounded annual growth rate, as we call it, right, of about 11%. So inflation has been around 6%, right? So the differential between inflation and the value of that pension fund, the value of your million rands, has been in excess of about 5%. Mm-hmm. Just to put it above inflation. So in real terms, that's how much growth you would have seen in your pension fund. Now, one of the other things that we are currently pursuing with our clients is to come up with other member benefits that the pensioners can have while they are still contributing.
So this is what I'm getting to,
yes.
because why, if I had put my R1 million in the bank, what would the difference be from me having you invest using my R1 million as opposed to me leaving my R1 million in the bank?
So what we try and do right? So to put it simply, so if you put your money in a bank, in a money market, let's say instrument, right, you will probably get about at most about 6% return on that, right? Our objective is to beat that.
Are you beating it?
We are beating it. As I said to you.
By how much?
So as I said to you, over the last 10 years, the compounded annual growth rate of the fund has been about 11%. So we're beating inflation. We're beating that 6% by about 5%.
Mm-hmm.
Yes.
So we're looking at 11%.
Exactly. So we're exceeding the return that you will get by putting your money in the bank.
All right.
Yes.
So, as I said, I guess your main objective here this morning is to reassure government pension holders that they need not worry about their monies that are being invested and administered through the PIC.
Yes, their money is safe, right? Yesterday the GEPF announced their results, and they showed the growth that they have seen, despite the very unfortunate poor investment decisions that have been highlighted, for example, at the Commission. That the pension fund has grown, even in a very poor economic environment, and even in an environment where equity markets have been quite challenging. And the markets in general have been quite challenging. The value of the fund has grown. I think the value is just about 1.82 trillion rands or thereabout now. That's where it currently sits. So there has been growth, even despite despite the poor investments that have been
well, thank heavens for that, and hopefully you won't make any more poor decisions because all of these things add up, and hopefully it won't.
Yes, and as I said, I mean, we are currently in the middle of a strat session as a PIC executives and the board, and what we're trying to do is to tighten up on processes to ensure that we minimize losses, particularly those that should be avoided, right?
Well, tell you what, we certainly will be keeping a beady eye on what it is that you guys do. Thanks so much to Sholto Dolamo, who is the executive head in charge of research at the Public Investment Corporation, and discussing with us the situation of the safety of pensions for government employees, saying that you need not worry that your pension payouts are guaranteed. And with that, it's time to take a